So it's the last Monday of the year and it's not even a trading day, right? It's December 26, 2022, Boxing Day, Kwanzaa. Happy holidays to whatever you celebrate, and hope those of you who celebrate Christmas had a very merry one. Now, here I am with the E-mini S&P March contract 2023, because while it's a holiday week and it's a shortened week and therefore, maybe nothing exciting is going to happen, 2022 has been a heck of a year. And I want to take some time during the holiday week to really make sure that I have looked at what's going on in the big picture of the markets and make sure that I'm fully ready for 2023. So I thought I'd take you through my exercise of what I would normally do, say on a Saturday or Sunday afternoon, but it's landing here on a Monday because it's a holiday Monday. And these are the broad steps I take to get ready for my futures day trading. So right here, you see my actual weekly chart of the E-mini S&P. You see some analysis on it, not a whole ton. And what I'm noticing is something very important. That's a concept I want you to remember and learn and study and make sure you fully grasp into 2023. That's the concept of the range of a bar relative to the previous bar. So here is last week's range, okay? Ended on Friday, November 23rd. Look at the range prior. The week ending December 16th was higher in its high than the previous week and lower in its low. In fact, that range consumed multiple weeks. That's called an outside bar. And the way that that bar opens and closes affects its impact even more. So the fact that it closed so close to the low of the entire range down here was the first hint that the following week might be weaker. Now, large range bars like that, especially outside bar ranges, they're a sign that volatility in the market has increased. So you want to be extra careful for those kind of big whipsaw moves where you trade up and test a high and then you fall back and test a low. Okay, we may see more of that in this final week of the year on a shorter term basis. Besides that, on the weekly chart, we're kind of at a inflection point, as I call it, where we are at an area where the market could trade up or down. I'm not getting enough insight from the weekly chart to make that conclusion, so I'm going to hop to my daily chart. This, ladies and gentlemen, is my daily chart. Yes, there's a lot going on. If you follow my techniques and methods, so price, time, momentum analysis, you may be able to capture some of that here. Like I said, I'm just pulling back the curtain. I haven't updated or touched anything on this since Friday, but I wanted to show you what I'm looking at to get ready for observing the markets tomorrow. Okay, so out of the gate, you see that I have focused in on the run up from the October 13th low to the December 12th high. Right now, we have pulled back, we have retraced some of those gains, and you can see that it's hovering above 62.5%. Okay, that's a Gann number. Now, this is very interesting. Look at the range we had on Thursday, December 22nd, right? It was a higher high than the previous day and a lower low than the previous day. So it was one of those outside ranges, like I just talked about on the weekly chart. But then it was immediately followed up by an inside day range with a low and a high that are within the prior day's range. I wanted you to see how there was this expansion in volatility on Thursday, contraction in volatility on Friday. Guys, when you see this, okay, this is something I learned from my dad. When you see outside bars and inside bars, one after the other, that's usually, okay, it's not 100%, but it's usually the sign that a big change is coming in that market, that a big move in one direction or the other is getting ready to unfold. Well, how do you know when it's going to happen? How do you know what direction? Here's some clues. So to start with, I'm going to bring my eyes down to momentum. This is my favorite momentum indicator, the RSI power zones. And you can see here that we are having a slightly bullish hint, okay, a suggestion for further upside based on momentum. Those of you who study it well with me in 4 zones RSI and advanced RSI power zones, you can see the pattern that's developing. For everyone else who may be newer to momentum, let me just point out that right now there's a disconnect between price and momentum that's showing that bulls are reasserting themselves. So there's opportunity here for bulls to continue to push this market higher. The thing is, we don't trade off momentum, we trade off price, and we combine that with forecasting and patterns and everything else. So right now, the biggest factor that I would look at in Tuesday's session and continuing during this last week of trading of 2022 is the following. First, I want to see a sustained break above the December 23rd high. What does that mean? Well, first, on an intraday basis, so I follow an hourly chart when I start my intraday analysis, I would want to see a break above this 3872.5. And then a sustained break would mean that there's a daily session that maintains a closing break above that level, okay? Then I'd want to see a break above the outside bar high. And that would, to me, suggest a recovery potentially towards the 4,100 area. That is probably as good as it's going to get before there's maybe another bit of sideways range or a reversal lower. Okay, what about the downside? Well, I would want to see a break below the inside bar. Notice I did not say sustained break, okay? Because it takes less energy for the market to fall than it does for it to rise, because fear is a stronger force than greed. So if I see a break intraday below the low of the inside bar, 3821.25, then I don't need to wait for a whole day to pass and get a closing break below. I can start looking for short opportunities. The follow through of that, of course, would be a push below that outside bar low. And notice that that's super close to that key retracement, that 62.5%. So there's a little bit of a cushion of support here. And guys, because this is the last trading week of the year and it's a unique one with the holidays falling on Sunday, but the market being closed on Monday, remember this Tuesday, Wednesday, Thursday, and Friday could have much lower liquidity, much lower action amounts than you usually see. So it could result in a bit of just like a chopping either way. But I'm not ruling out that this outside bar and inside bar combination is hinting that there's going to be a brewing and a move unfolding. And the best way to follow what I'm seeing in these charts is to follow me in my Skinny in the Mini. And I've been writing and sharing the Skinny in the Mini, my E-mini S&P 500 futures for I don't even know how many years now. I've lost track, okay? And it's something that is super helpful, not just if you're trading the E-mini, but if you're also looking to see where the broad market might be headed, because that dictates how you manage any other positions you have. Futures, stocks, commodities, anything else. So inside, outside bar, that's the lesson of the day here, guys. And I dig deep into that in the Gann candlesticks trading system as well. But I'm gonna continue on my own prep of my charts here, digging into the 60-minute that I have down here, continuing into the NQ charts as well. That way I'll be ready to share my skinny on Tuesday for those of you who are trading this holiday week. Catch you on the inside.